Hello. Today we're going to talk about common size income statements. Common size income statements means that you calculate the percentage of the total that each line item is. With an income statement, net sales is 100%. So everything else is a percentage of that. So cost of goods sold for Under Armour, 53.6%. You get that by taking the cost of goods sold, 25.85, divided by net sales, 28 or 48.25, and so on. Right? So common size financial statements is a financial analysis tool. It really helps to compare companies that are different sizes. That's why they're called common size income statements. By comparing percentages, you can compare how well a company that's very small is doing in relation to a company that is very large. Okay, so these are all percentages in the percentage column. All right, I'm also going to talk about common size balance sheet. A common size balance sheet, 100% is going to be total assets and total liabilities and stockholders' equity, which are the same amount. Okay, so we're going to take every line item that is not in the total and divide it by that total amount to get percentages again. And again, this is a way to analyze companies that have different sizes and compare it by percentages. Thank you.